All right, well, welcome everybody. I'm John Furukawa. I'm with Fresh Consulting, and I'm representing Oregon Entrepreneur Network's upcoming Pub Talk here with my two guests. I've got Dave Hansen with Umpqua Bank and Caroline Selia with SMBX. So glad to have you here and welcome. Now, here's the thing. Fundraising is the hardest part for the founders. It is such a challenge. Especially a challenge right now. And there are multiple ways to fundraise. We've got our typical venture capital story. We've got the convertible notes. We've got the bank loans. And every founder has to make that difficult decision. Do they want to give up their equity and control, or are they going to take on debt? So let's have a conversation together. I think that our viewers probably are not necessarily experts in non-dilutive funding, and that's why they'll be watching. So maybe we could start Caroline, if you don't mind, what is the difference between dilutive and non-dilutive funding?
Yeah, sure. Dilutive funding really requires the entrepreneur to give up ownership, some ownership of the company, while non-dilutive funding allows them to maintain 100% ownership and control. I think another way people often think of it as, equity versus non-equity, to interchange those words.
And Dave, do you have anything to add to that? The
No, I think
quandary?
that accurately hits it. I think that it is a dilemma that a lot of founders have is, how much of this can I keep for myself, or how much of the ownership is going to get diluted as a result of issuing more stock or doing whatever they might do. So it's a great conversation to have.
So Dave, who should be considering non-dilutive funding?
Well, I think to a large degree, people should consider and look at their options early on at non-dilutive funding in all cases if they can. It's a matter of how much resource they can really bring to bear with non-dilutive funding versus, and some of that comes down to growth rate of the company. How much working capital are they really going to need to launch things, and can they generate enough through the non-dilutive channel? Or are they in fact going to have to give some of their ownership away to bring in other capital?
And do you think that there are certain types of startups or certain conditions that really give a strong yes to the non-dilutive approach?
Again, comes back, I think, to growth. And how quickly is growth going to kick into gear? Because the faster that growth kicks into gear, and depending upon the non-dilutive funding that's available, it may not be able to keep up with the growth, and so they might be forced into a position of looking at, I'm going to have to go to a dilutive funding model where I raise some equity that way
Okay.
and give away some of the ownership.
So again, Caroline, what are some of the benefits that the non-dilutive funding provides to the businesses and the entrepreneurs behind them?
Yeah. Oftentimes, I like to think of it as where the entrepreneur is in their, timeline, because that really, I think, influences between those two decisions. Personally, a lot of the small businesses and small business owners that we work with, because we are heavily regulated through the SEC and FINRA, they all have to have at least 6 months to a year's worth of revenue on the books. So those folks tend to be great fits for non-dilutive funding because they are capable of being able to pay that back, right? It's really about where are you on your timeline? Are you capable of paying that back immediately? Then great. Probably non-dilutive financing is really good for you. If you're just starting out and you don't have that history, then that's when I think you really start to look at, how much equity would I be okay with giving up? And we all have heard those stories, like the famous stories of people bootstrapping and, starting their businesses in their garage and all those things. But, we all come from different circumstances in life. And I think, the fact that there are multiple opportunities to start your business, to continue the growth of it, is really so wonderful. If we didn't have all of these different avenues, then we wouldn't have so many exciting small businesses, big companies, growth, and it would be boring. Let's just face it.
We certainly wouldn't want entrepreneurship to be boring. That would ruin it for all of us.
Yeah.
So Dave, I've received some, I'm good friends with the last business banker that I worked with as a consequence of the timely advice and guidance and help that I was given. If I came to you and I said, listen, I'm a control freak. I am not able to give away equity. And you look at my short existence in my new company that I started yesterday, what counsel would you give me to earn my way to be a qualified non-dilutive candidate?
Yeah, that's a tough one, because again, it kind of depends on, it's a little bit what Caroline mentioned. It depends on circumstance. Some people are able to draw on resources in a non-dilutive way that is great. Family members, relatives, et cetera, et cetera. Some of that can work to a point. So that's an option. The other thing that could be an option too, depends upon what the model is, the business model. But is it a business that is eligible to get some kind of grant funding? So that's another source of potential non-dilutive funding that they could access. But it depends on what they're doing, and whether or not the story is going to be compelling enough that they could attract that kind of funding. But I would really encourage them to, look at all of their choices. And again, another thing that Caroline mentioned is you have to look at where people are at in their timeline, as far as their evolution of where they are. When did they start up? Where are they at? Where are they going? Because that makes a big difference too, in terms of what their choices are going to be. And sometimes if they have a really compelling story, you may also see a customer who might step up and say, hey, I love what you do. And I love what you do enough that I will provide some funding in the interim to help you. That can be a possibility too. Depends on, again, where people are at and how compelling their story is.
Right. And are there some interesting, I guess, thresholds and milestones for bank provided options?
Yeah, it depends on the bank, but generally speaking, with the bank funding side of things, you're looking at probably 2 to 3 years of operating history before traditional bank funding could come into play. Obviously, SBA funding sometimes helps us in terms of being able to utilize an SBA guarantee to help get there. Some banks are different. Some banks will tolerate more of a startup kind of a situation with an SBA guarantee than others. Depends on the credit policy of the bank. So.
And what about marketplaces, Caroline? Is there,
Yeah.
what does it take to jump on there and tell your story and be paired with those who want to support it?
Yeah, it's really interesting what Dave mentioned about, this, potential customer that is so invested in that small business, perhaps they would provide a loan. That's essentially what SMBX is. It is a marketplace for regulated crowdfunding, which is really a brand new concept. This just came into law with the Jobs Act in 2016. So actually, I find most of what I do for SMBX is really educating people and entertaining, of course, always. Because you gotta make the SEC, FINRA, you gotta make that entertaining.
Those alphabets need help.
Yeah, they need so much help. But when Congress passed this act, our co-founders really went through this and, saw this opportunity, as well as other people in our field that are our competitors. And, this really broke things wide open. So now at a place like SMBX, small businesses can go to our marketplace and meet with our operations team, our marketing team, which I'm a part of as well. Also our salespeople, and we help them through that pipeline and essentially, get them up on that marketplace. And then they go out there and they really tell their story. And it becomes, the small business bond, which is what we call it when investors invest in a small business on SMBX. really becomes a new asset class.
Mm.
And just something really unique for your portfolio, and it connects the community to the small business as an investment. This is not a donation, this is an investment, and you get a return on that investment, with all the asterisk, of course, in that fine line print. But that really, I think, allows, to what I was saying earlier with what Dave said, it allows this customer who is really passionate about this small business to take part in this growth, but in a regulated, controlled environment, which we have found is a really positive impact in the community. And so many of our small businesses started during COVID. So community has just really been a big theme, and especially in the Portland area, we've seen that.
Well, during COVID, but also every other time, as
Mhm.
I think Dave mentioned, founders start in their garages and in their basements. And also, my personal experience, no offense to any of my good founder friends, but the founders tend to be fairly focused and obsessed with their own concept and their direction. And they maybe don't know much to start with about what they're going to become experts in over their journey, which is financing. Where, Dave, where would you send people to find out about different products and offerings to orient and to begin their journey as experts in finance?
Yeah, okay, so I'm gonna be biased on this one. Is it depends. We ourselves at Umpqua Bank, one of the things we do is we focus on adding value from a standpoint of being able to have enough knowledge, or people have enough knowledge to be able to have discussions with people about what they're doing. Because you just nailed it. What so many of these folks are doing is they're an expert in something, but they're not an expert in financing, and some of them have unrealistic expectations. I banked with my bank for 10 years as an individual, and now I'm going to approach the bank and they're just going to magically give me money to do my startup. Well, you have to kind of stand back for a minute and go, okay, let's create some realistic expectations, and also look at the evolution timeline of a business and say what is appropriate at what point in time along the continuum. And that's really critical. Sometimes great bankers can be a good source to provide that, or SBDC sometimes can be a good source, or it sounds like Caroline's company could be an excellent source too. Folks that really have a broader view of what the funding horizon looks like are going to be more helpful, because I honestly think that as a financial services person, we owe it to the folks that are starting up these companies to educate them, because they're not educated in the finance side of it. They're focused on what they do best and what they're trying to capitalize on. So
that's awesome. Thank you. And Caroline, do you have anything to add to that as far as accessing information, within your special niche, or broader than that when you're trying to help a new founder get informed?
Yeah, I mean, a lot of the business owners that we work with at SMBX come to us, and people, gone are the days where you could just go to one person and get all your funding.
Mhm.
That is, no more. Now we are, putting things together, we're patchworking it. So obviously, working at SMBX, I've also worked before joining SMBX. I've worked here in New York on Wall Street for about 10 years. So I have a lot of experience in the financial services, in the banking industry. And, you try to help people understand the whole entire overview. I'm not just concerned about what SMBX is doing in that. We are definitely, our operations team is looking at the whole entire package. And, we find that oftentimes working with these small business owners that they come out of it and say, wow, I had no idea that I needed to know X, Y, Z.
Yep.
Of course, coming from my side where I'm heavily into marketing, I explain to them regulations. I explain to them, you might have to answer some questions of like new investors. How awesome would it be if, you know, your niece or nephew, for the first investment they ever made in their life was in your small business? So I also agree with Dave. I take it very passionately to really help, you know, financial literacy, you know, like I said, become entertaining and educational.
Yeah.
And at the end of the day, when we have lots and lots of great ideas, we want them all to succeed. We
Yeah.
don't just want the people that have, you know, the easy path to funding. We want everyone to have, it needs to be equitable. That's how we'll see change. And that's how we'll really, you know, demonstrate something more. And just for the, you know, whole part of this, I think that this event, coming to the Oregon Entrepreneurs Network, is also a great way to get information, because you're going to network and meet people from all of these different industries, and you never know who's going to be the person. It could be me and Dave helping you.
Yeah, no, and I'll just chime in here on the whole network, Oregon Entrepreneurs Network. The whole concept is you have a network of resources that you can tap, and there are people with all kinds of backgrounds that are involved in OEN that can be super helpful to somebody just starting up. At OEN several years ago, you know, we did an educational series. And that's one of the things we looked at. We looked at different funding sources and had people talk about, you know, how would you approach it, and whether it's, you know, equity funding, non-dilutive funding, bank financing, you know, on and on and on. And again, that's the whole concept of get involved in the network, because the network's going to help you to be successful. And OEN has done its job if we really have helped somebody start, cultivate, grow, and be successful. That's really, that's a commercial maybe for OEN, but it's true. It's what it's all about.
I think both of you have done the excellent OEN in promo bit that I also plan to do, which is to say, this is on June 14th. We're going to gather, you're going to be there, and so are a bunch of other people. You know, there's going to be founders in the room. There's going to be people who provide supporting services. There's going to be people looking to match make into their next startup. And there's going to be people who understand the world of finance and are trying to connect those dots. So really looking forward to the conversation. I hope everyone can go, but I also know that we've been streaming it and archiving the video for others to enjoy after the fact. So thank you, Caroline. Thank you, Dave. Looking forward to seeing you in a couple of short weeks.